Welcome to another episode of the Monocle Banking Podcast, your weekly dose of finance, economics, and everything in between in a world where mobile wallets are still competing with paper and coins, it seems. I'm your host, Michael Avery, and today we're opening our wallets and tapping our smartphone screens as we explore the evolution of the South African and indeed the African payments ecosystem. Scaling digital financial services in Africa is absolutely essential to enable and achieve economic and social development and driving access for those that remain unbanked and underserved. Now, the South African Reserve Bank recently published its inaugural payment study report. It was released on the 5th of September, and it provides a really unprecedented look into the behavior of South Africans in their daily financial transactions and use of payments, and reveals not just the methods that people use to make payments, but how they actually perceive those methods. And unsurprisingly, cash remains very sticky. It forms part of the SARB's Vision 2025 strategy, and today we have the honor of speaking with Tim Masela, who is the head of the National Payment System Department at the SARB. Tim was appointed to that role back in 2012, but he joined the Reserve Bank all the way back in July of 1994. So he's been there for, the same age as our democracy, 30 years. He also chairs the Payment System Subcommittee of the SADC, Committee of Central Bank Governors, and he also represents the SARB on both the Bank for International Settlements Committee on Payments and Markets Infrastructure and the Continuous Linked Settlement Oversight Committee, which is chaired by the Federal Reserve Bank of New York. Tim, I've got to say, with that introduction, it really is a great pleasure to have you on the podcast. Welcome.
Thanks, Michael. Thanks to you and the listeners.
Now, 30 years inside the Black Tower, you've really seen the evolution, having been head of the payments division as well since 2012. But I've got to ask you, what first saw you get involved in this very specialized field all those years ago?
Thanks, Michael. I think in terms of background, as you indicated, I joined the bank way back in 1994. And at the time, I joined as a computer programmer in the IT department and was involved in key projects where we developed the banking system for the bank. As people would know, the central bank is banker to the government, so it runs a banking system for the government entities. So at the time, I was a computer programmer responsible for the bank's accounting systems and, as I say, banking. And as you would see in my short bio, I studied accounting as well at university. Then in 1995, the bank started with the program for the modernization of the national payment system. This led to the publication of what we call the Blue Book, the strategy document that led the reforms from 1995 to 2005, leading to the promulgation of the National Payment System Act, enhancement of the South African Reserve Bank Act to give it powers on the payment system, and the launch of the settlement system known as SAMOS in 1998. So in this journey, I was involved from the IT side in the development of the national payment system and specifically the settlement system. And I continued to support that system in the IT department until year 2000. And the National Payment System Department was established from a division in the IT department as a department in the year 2000. And I joined that department in 2001. Moving from the IT department, from the tech side to the business side, being a user that is supported by the techs in the IT department. In a nutshell, that's how it happened. And I was in the National Payment System Department, and I only assumed the role of head of department in 2012, as you said, Michael.
A remarkable journey, but really from the very beginning, you've seen the system evolve into where we are now with RPP, the rapid payments process, for a little over, it must be 18 to 24 months. We're in that window of it. And I've got to ask you before we talk about the report, whether in the early days, much like the legacy private banks battle with COBOL systems, were your internal systems COBOL based? And is there kind of legacy hangover or debt inside the payment system?
Indeed, for the settlement system that we run in the country called SAMOS, the South African Multiple Option Settlement System, as well as the one that we run for the region, the SADC region, called the SADC Regional Real-Time Gross Settlement System. These two systems currently are developed in COBOL, KICS DB2, old technology, robust on mainframe platforms. They're still serving us well. And if you had time, I'll share with you the transitional journey that we are on to come up with new generation real-time gross settlement systems under a program that is called the Payment Ecosystem Modernization that is underway at the moment. And we will deliver this in a few years' time.
Well, please do, just a little bit, because I know that, obviously as technologies change, we've got to ensure that we remain up to date with that. And the release of the SARB's Vision 2025, I think, showcased the central bank's intention to address some of the inefficiencies in the national payment system. And it's a big moment to promote financial inclusion and interoperability and flexibility. What does that entail then from a systems perspective?
Yeah, indeed, the cornerstone there, you nailed it, Michael, is financial inclusion. As you know, in the Vision 2025, there's 9 goals, but the 8, when delivered, would ensure that we realize financial inclusion. Now, the central bank is responsible for providing payment settlement services because the settlement banks have got accounts at the central bank, and that's where we pass money from one bank to the other. For instance, if I go to an ATM of ABSA with a FNB card, I get served by ABSA, I get money from ABSA, but my money is at FNB. Then FNB has to settle ABSA for the transaction that I undertook, and that settlement can only happen in the Reserve Bank through the South African Reserve Bank real-time gross settlement system. Now, as you asked me, the domestic RTGS SAMOS, as well as the regional one, are currently running on old technology, and we are on a journey to implement new generation real-time gross settlement system. In recognition of the quantum of the investment that we have to make in there, we decided to overhaul the broad payment ecosystem. And in this journey, I'll just give you a flavor of a few things that we are looking at. We said the RTGS is just but one component in this big puzzle, and there's other pieces of the puzzle. And you mentioned the repeat payments program that led to the implementation of PaySharp, which is a real-time retail payment system where today, if I pay you at Standard Bank and you bank with Standard Bank, the transaction is instant because they just debit my account and they credit your account. But if I pay you at another bank, there's a lag that the money may get there later. But we think with technology at this point in time, there's no reason for that delay. If I transfer for you money from Standard Bank and you bank with FNB, that transaction can be instant, and that's what the instant payment offering that's called PaySharp is supposed to give us. So now, in this modernization of the payment system, we believe we can make PaySharp more effective in the economy such that it can eat into some of the transactions that today are in cash, so that consumers can have a choice, whether you want to pay in cash or you want to pay digital, but they shouldn't be inhibitors of saying, if I'm paying a street vendor, I only have to pay cash because they cannot acquire digital. If I pay in the rural areas, I can only pay cash because they don't have digital acquiring infrastructure. We want that to actually roll out to those areas and ensure that through a mobile phone, if you have a wallet, you can pay anywhere. We have to solve for online and offline transactions. If the network is down, you should still be able to transact. So we want to look at this in the ecosystem modernization. Realize that in transacting, you need to trust the other party.
Yeah.
If you pay me, you need to know that you pay me. Then we need the financial digital identity embedded in the system so that you know who you deal with. And even for money laundering and the crooks, we can actually ensure that we root them down. So there's building blocks. RTGS is one. Fast payment service is one, and there's fraud management systems that we need to embed, machine learning, artificial intelligence to learn the behaviors so that our system can be safe.
Wow.
In a nutshell, I just thought I should share this flavor. So this journey is a journey that we are on. If we are lucky, we should deliver most of it in 3 years because it's a mammoth task, but we could even go slightly beyond that to implement all the pieces of the puzzle, the payment ecosystem modernization.
I think, Tim, you're going to be able to deliver MBA courses on the systems change once you've finally delivered on that with all of the lessons learned along the way, because it is, as you say, a mammoth task. But I think many individuals who are not at the coalface of payments as you are might question exactly as you said, why is it in a world where money is really ones and zeros and digitized that I can't have money transferred instantly, seamlessly? Why is it that I have to wait for settlement in a couple of days if it's different banks? And I think you've given us a good flavor as to why and what is being done to modernize and change that. Now, I think the payment study report that you released is an important component of this process, because you're saying, well, we need evidence-based research here. We need to understand how South Africans interact with payments. So maybe you could just share how you went about conducting the payment study report. What was the methodology and what were you seeking to find out?
Essentially, what we wanted to find out was to get insights on consumer behavior and specifically the drivers of why they undertake things in certain ways. And in some respects, if there's misconceptions and lack of understanding of the various options. So we undertook this study in two approaches. The first one, we segmented the South African market, spread in all provinces, and sample of respondents and did a survey of how consumers are engaging with payment methods and instruments. That was a survey that we ran and we gathered information from there. The second one, in the same area, looking at all provinces, covering all areas, we identified individuals and we requested them to keep a diary over a period of all the payments they undertook in those certain days. They record them in a diary. And then we collect that information. So the diary's actual transactions that they undertook, and the survey is responses as to how they engage with the payment system. We took both, and we then analyzed the data to get the insights that I'm saying we sought to understand the drivers of why consumers are more comfortable with certain instruments and not others. In this, as you can imagine, we found that when we actually analyzed the data, there were some disparities. For instance, if we looked at credit card data, you could find that in a family, maybe myself, my wife, and my child, for instance, I have a credit card, and for some reason, maybe my wife doesn't have one. But if she wants to transact somewhere where a credit card is required, she would use mine and my child will use mine. Now, in the actuals, it would seem as though those transactions are undertaken by me because I'm the owner of the credit card, but they were undertaken by my family members using my credit card. So somewhere there you could find some disparities, but the data was aligned in the main. So I just wanted to give you that take.
Yeah.
Now, when we started analyzing the data, as you'd have gotten from the payment study outcomes, cash is still dominant in terms of number of transactions. That is the volume of transactions. But it's less so in terms of value of transactions.
Yeah.
Because the baskets that people buy in cash are smaller. Next come debit card. Debit card is next higher in terms of volume, but higher than cash in terms of value because of the basket of what people buy with debit cards. Credit cards are coming a third, maybe even down, because credit cards you have to qualify for, and only probably people in a certain LSM can qualify for them. But everybody qualifies for a debit card. And we found a misconception, Michael, in the study. People were responding to say, I don't qualify for a debit card.
So there's still a strong need for financial education when it comes to the perceptions in the marketplace.
Indeed. For as long as you have a store of value, you qualify for a debit instrument to debit that store of value. So you don't have to qualify because you're earning so much. Those only applies in a credit card because there's an advance of credit that is going to be advanced, and the advancer needs to be comfortable that you will be able to service the debt. But I mean, that's some of the things that we found out. And indeed, as you say, calls for us to come with consumer education, to demystify some misconceptions that could be there in the system. Now, cash is king. And as I said earlier on, we need to modernize the system such that people use cash because they feel so, but not because there's no alternative. We need to have alternatives for people to choose, and we need them to be informed about the best instrument for whatever they would like to do.
Through the research, and it's so interesting because despite the global trends, as you say, cash remains this prevalent payment method in South Africa. What do you see as some of the key reasons for cash's continued dominance, even though from a volume perspective, we are seeing things turn, especially when we see digital payment solutions are expanding. We've got digital wallets, we've got PayShop, still relatively new though, but cash is still dominating a lot of these segments in the underserved population. Is it a trust factor? Is it an education factor? What are the big factors that need to be overcome in order to shift the underserved populations into digital?
Well, there's several reasons, Michael. The first one would be that all acquiring infrastructure where you have to buy has to have an option if you want to buy digital. So if we have that, then we have won battle number one. But secondly, cash is convenient. Just imagine when you buy with cash, you just take it out, you give it to me, and we conclude the transaction. Some of the digital means, which is for you to take this instrument, go through step one, go through step two, go through step three, people lose interest. They feel that is cumbersome. So we should make things so simple, closer to how you deal with cash. That's why you'll see in the card space, you'd find that you tap a card, and if it's below a certain amount, you don't even need to put in the PIN. So it's easier. But if you tap and you have to put in the PIN and then you have to wait for this, you find it to be cumbersome that if you had a note, you'd have given me the note and maybe you don't even need change and then you go and it's fine. So we need to ensure that alternatives to cash work as seamless as cash so that people find it that way. Secondly, the cost for alternatives to be able to make an impact on cash, they should be perceived to be as free as how people perceive cash. Because with cash, people believe that I withdraw 1,000 and I pay a transaction fee to get the 1,000. From then on, I transact free. I don't pay any fees. So the alternatives should offer people that comfort that they transact as free as cash, or maybe even better. Let's say, for instance, what happens in the system with cash, you don't know who is buying what. The alternatives, if they as free as cash and maybe could even track you and give you loyalty points, you're going to even move from cash to that because there's some sweetener that you get even beyond that. But at the base, the alternative should be perceived to be as free as cash and should be as frictionless or close to frictionless as cash. You see the QR codes where you just scan and then the payment happens. So that convenience, safety, and efficiency, if it's combined, we'll see a moving of the needle towards digital from cash. For the providers of the service, it should be sustainable. They should be willing to invest in that because there should be a return that they expect. So that puzzle needs to be solved for as well.
I suppose that's the challenge, isn't it? Because I know when PayShop was first introduced, if you look at similar systems in India, Brazil, Singapore, for example, they are as good as free. Whereas initially, I think there was only one bank that offered it free for 3 months, and thereafter you did incur a cost or a charge. But we need to ensure that there is investment in the infrastructure. How do you strike the balance between the two?
Well, we believe that when you roll out these infrastructures, we should find a way of collaborating on the middle mile infrastructure and competing on service and products on top of it. And when you design products, I believe that we could think broader and not think in silo and say, I launched this product and I want to make 2 cents out of it, and that's it. That project should be coexisting in a suite of products that makes a proposition that would give value, and then you can afford to give some things for free and have others paid and still have a balance and make money out of it. I'm not saying I have a solution, but I'm saying we think broader. Other markets are able to do it, so it means it's possible. Because my call is, if we say, please offer this for free and it's not commercially viable, it won't be sustainable. So there should be a sustainability factor that would keep you interested in continuing to provide the service. And if we can have that sweet spot, then we should be able to have sustainable offerings, and you would even do R&D and improve the product and the service going forward.
there's definitely a space for innovation or incentives or adjustments to the way one approaches this to ensure that, ancillary value through loyalty and being able to better service individuals by understanding their financial payments behavior can help cross-subsidize certain elements of this. So again, it does happen in conjunction with the regulator overall and the SARB. What role do you see businesses, particularly if we're talking about the underserved market, the small and the micro enterprises playing in helping also shape the future payments landscape? Because you mentioned earlier that a transaction is always a two-way process. Given the fact that we see in the informal economy, in the township economy, there's still a heavy reliance on cash, on traditional payment methods.
Yeah, my take is that cash has got its many risks and people have learned to manage those risks. If we introduce digital offerings that take away those risks, and of course we address the convenience aspects that we spoke about and the cost aspects, it should offer a compelling proposition for adoption by the providers like the spaza shops, the shops in the township, rural areas and all that. Because you could think theft, robberies and all those other things that are attracted by cash, ideally, they should be minimized in the digital world, of course, but the criminals will try and develop something that tries to take that into account as well. But we see a win-win if we develop the products that meet both the supply side and the demand side, because we shouldn't just consider the one side.
Yeah,
we should consider the supply side as well as the demand side. And as you see, our study was focused on the demand side because we think we have sufficient data on the supply side.
Absolutely. Now, obviously, in all of this, there's an element of trust that is critical. You've got to be able to trust, and often cash, I think, just has that inherent trust because it's tangible. And again, it boils down to education. What did the report reveal about public trust in the newer forms of payments like digital wallets and online banking apps? Because I, in my personal interaction with the builder the other day, wanted to pay them via PayShop. And, there was this, no, we'd rather have it in cash. And I tried to sit down and explain to this guy that, if you start transacting more, you can then borrow for your business. Banks can lend to you. They turn you from a thin file to a thick file customer. I try to explain it in his terms, though, and there still seems to be a distrust.
True. I think that, of course, we, in the era where we're proposing solutions for digital, the cyber crimes and other things that could also come in there. But I think you're right. Trust is key. And if people can trust that if you pay them digitally and they get a response that says the transaction is successful, indeed the money will be there. Of course, there's other matters that we still need to address where people don't want an audit trail of the transaction. Maybe they prefer cash because it doesn't leave an audit trail. But if you do digitally, then it leaves some track to say money had moved from so to so. But let's say that is not there. We need people to trust that the digital system is safer and we have checks and balances for hacking and cyber and all those other things. And indeed, when confirmation is given that the transaction is successful, the money would be delivered and it cannot be arbitrarily reversed, because maybe some believe we can do this digital transaction, then they release the goods or the services. And at some point, because digital can reverse the transaction, then they could be done under after releasing the goods or services. So we need that entrenchment of finality and the fact that once final, the money is theirs. And in our system, if the transaction is fraudulent, it needs to be reversed from where the money went to and come back. So we need to build the confidence in the same vein as we actually rolling out the solutions.
The report did touch on crypto assets, but they remain a minor player in the payment ecosystem. How does the SARB view the role of cryptocurrencies in the future of payments in South Africa? Are there any plans to maybe further regulate or encourage the use of maybe blockchain-based payment systems?
Well, ideally, we prefer to separate the technology from the business model. So the blockchain is the technology that can enable things, and the business model is a different thing. But let me apply myself to crypto. So there we have three focuses as the SARB. We have crypto assets, we have stable coins, and then we have central bank issued digital currency. they would be maybe closer. The central bank digital currency is a currency that we would issue in a digital form and can be transacted on a peer-to-peer basis, similar to when I give you a note. So the SARB did some feasibility studies on this, and the last report was not released to the public. We were looking at the feasibility or desirability of issuing a CBDC. Further work and research is underway at the moment on that. Stable coins, there's parties that would like to issue stable coins because stable coins are crypto assets. Because they are not stable, they fluctuate, then people pack stabilization mechanisms on them to stabilize them. We open in our regulatory sandbox in the SARB for parties that want to issue stable coins to come into the regulatory sandbox, test this with the regulators to see the feasibility of that succeeding. Crypto assets directly like Bitcoin. We issued a notice jointly by the Treasury, the SARB, SARS, all the regulators indicating that we're not regulating this. They didn't seem to be systemic in terms of how they are in our market. But recently, the Financial Sector Conduct Authority have decided to regulate the issuers of that to disclose information to consumers. And SARS has indicated that if you deal with crypto assets and you make profits, you have to pay tax. But from a payment system perspective, we're not regulating them. We're not registering them. We are monitoring the situation. If it goes to levels of concern, we may regulate it. But this is a stance that has been adopted by many central banks. And we leave it, but we observe it. But consumers that choose to deal in it, if they burn their fingers, there's a notice that said, you are on your own. You must decide after having the right information.
Caveat emptor, absolutely. Let the buyer beware in this instance. But it is interesting given that we've seen the likes of Tether and others try and, solve some of these problems from a remittance and access and ease of flow perspective. Tim, finally, as the SARB continues to collect this type of data annually or biannually, what changes do you expect in the payments landscape by 2025 and beyond as Vision 2025 unfolds?
Well, we started a journey, Michael, where we know 2025 is next year. So our current vision and strategies come to an end. So we started work on Vision 2030 plus to say at least 5 years or beyond, what would be our vision? I believe some of the goals that are in Vision 25 with the strategies that have not yet been realized will be carried forward. But there would be engagement with all the stakeholders to shape a future vision. 5 years or 10 years, we'll decide whichever is most suitable. Things changing faster, we may say 5 years, and then we identify the goals that we're going to pursue. And in this respect, the digitization effort, issues of financial integrity to ensure integrity of the system, management of fraud, and all those aspects would need to be embedded to create trust in the system going forward. So the engagements will start. We hope to finish the planning in this quarter and start the engagements on a future vision. Our plan is that we spend the whole of 2025, while the current strategy is still applicable to the end of the year, engaging on the future strategy and release that future strategy in Q1 2026. That is 2025 engagement with all stakeholders. What do they like to see? And where are we going? Where are the other markets going? What is the cross-border landscape look like? Because we are not living as an island. Factor all that and have a future vision. But digitization is going to be at the heart, and the building blocks that needs to support that would have to be embedded. So what I said earlier on as part of the payment ecosystem modernization will form one of the key pillars of that future vision of what will develop post 2025. We can start the work in 2025, but it will take us a few years beyond that.
Well, it sounds like a lot has been achieved already, but still so much more to go. That brings us to the end of another insightful episode of the Monocle Banking Podcast. A big thank you to Tim Masela, Head of the National Payment System Department at the South African Reserve Bank, for joining us and sharing some of the key findings from the inaugural Payment Study Report, as well as the early days of developing the IT infrastructure of our payment system and how it's modernized over the years. Thanks to our listeners for tuning in. If you enjoyed the episode, be sure to subscribe to the Monocle Banking Banking Podcast for more deep dives into the financial trends and issues shaping our economy. Until next time, I'm Michael Avery, and this has been the Monocle Banking Podcast. Stay informed, stay engaged, and we'll catch you in the next episode.